Peter, the market is pricing that we're most likely going to get that rate hike in August. Should we get it, though?
Should we? OK. We would expect the hike is delivered, but, yeah, frankly, if I were on the MPC, I wouldn't be voting for a hike.
Why not?
Because I think the economic uncertainty that the country's got to deal with over even the next 6 to 18 months is so great, and the level of consumer leverage so obviously high, that I don't believe that we're going to be in a position to bounce back from the rate hike path that the Bank of England is illustrating. So I can understand how they've arrived at their forecasts, but I don't think they're taking into account the political uncertainty.
So, Peter, what exactly is priced into some of these UK asset classes, be it bonds or equities or the cable trade?
Well, the beautiful thing about the bond curve, for example, the gilt curve, is that what's priced in terms of the 2s 10 slope is pretty much asymmetric. Because on the one hand, we would be expecting that 2-year yields will be rising. We would expect that the 2-year gilt yield can go up towards 1%, while we would expect that the 10-year yield is going to be falling. So really, 2-year yield is going to be dictated by the Bank of England's policy and their rate path, but the 10-year yield is really going to be dictated by the Brexit uncertainty and demand for what is called the risk-free assets. As riskier assets in the UK start to underperform with the Brexit uncertainty, it's that 10-year gilt yield and the longer tenors on the curve that are going to be in strong demand. So actually 2s 10s we think could come down to 10 basis points.
You said Peter Chatwell is such a pro. He saw my chart even before I showed it, but I'm going to bring it up now. Here we are. So we've seen this flattening trend in the 2s 10s, and Peter, you think that's going to continue?
10 basis points is where we think for March.
For March, right. What does that mean for cable? Does it bear any relation? Because we were talking about the relation between the curve and the dollar earlier when we're looking at the US.
Yeah, we would expect it does have a relation, but not in terms of interest rate differentials.
Yeah.
It should mean that cable is disobeying all of the laws of interest rate differentials. Cable is likely, we would expect, to be going down towards 120 over this same sort of period before then recovering for a longer-term recovery. But hitting 120 we see as a likely outcome purely from the political uncertainty. And we think that the Bank of England, in putting rates up and in talking about interest rate hikes in the future, is not really going to be able to influence the FX market here, because the FX is really going to be trading on uncertainty and actually the withdrawal of real money investors from the UK as an asset class.
Peter, there is a Bloomberg column that came out just a few minutes ago from Teresa Raphael, and she writes, no deal Brexit is crazy, but it just might happen. You think back when it was considered a laughable negotiating tactic. Where are you on the spectrum on hard and soft Brexit and how this is all going to play out?
I think the likely delivery from the government, I think all they've got a mandate to deliver is something like a 52% Brexit. So, in other words, a soft Brexit. I think that's all that the House of Commons actually has the capability to deliver. And if it tries to deliver something else, I would expect then a second referendum pops up and becomes the likely outcome, which I think would then be more likely also to suggest that a soft Brexit outcome materialises. I think if we try to push for anything harder than that, that's when the FX market really starts to be disappointed with what's trying to be delivered. On the other hand, if we try to push for something that's too soft, then I think the likelihood of the EU pushing back on that becomes great.